started the week by buying another 14,000 Bitcoin yesterday. And then we woke up this morning to Stretch buying even more Bitcoin, with them already nearly up to another $1 billion of Bitcoin bought today, which has got me thinking, and I keep reiterating this point. Is Michael Saylor single-handedly ending the Bitcoin bear market, and has Stretch fundamentally changed everything? Guys, it's truly incredible what we're seeing with Stretch right now. At first, I really didn't understand the product. I'm like, okay, another strategy product, another, Bitcoin equity. Like, what's this mean? It doesn't mean anything. But as I said last week, when he literally bought $1 billion throughout the whole week, the entire week, I'm like, this feels like if it goes even more exponential, that everything has changed. And here we are. Monday comes around, literally less than 48 hours later, and he's bought $1 billion in one single day, and looking like he's going to buy another billion today. Anyways, guys, before I get into the source material, I am here with our boy, Kent Haliburton, CEO and co-founder of Saz Mining. So, Kent, always a pleasure, bro. I know Nika's been ditching us every time, but hey, we'll make do with us, man. So, anyways, here is Strategy's Twitter. And they go, record day for STRC, $1.1 billion in daily traded volume, up 46.5% from previous high. Yeah, you heard that right, guys. It's up 50% basically from their last previous high. The amount of capital flowing into Stretch, or rather maybe the amount of interest from institutions, from investors into this Stretch product, again, the fixed income product that gives you an 11.5% yield on it, it seems like it's catching storm, guys. It seems like it's really making some waves. And I know Saylor's been looking for this iPhone moment for a while. It's almost like he may have just found it. It's truly incredible what we're watching here. But again, I think the stark contrast here is last week, in probably the best week they ever had with Stretch, they bought $1 billion throughout the whole week. The week before, it was somewhere around like 700 million on a short week. Last week, $1 billion. Now it seems like he's buying $1 billion a day in Stretch. And I did see some comments in the chat on one of our shows Friday, like, oh, here they are again talking about the supply shock. Well, guys, it looks like it's happening. It looks like Saylor is literally buying up all the Bitcoin, and finally the Bitcoin price is reacting to it. And it reminds me of one of Saylor's tweet. He posted about, I don't know, a month or so ago, and he's like, there's a time delay from when we buy Bitcoin and when the price goes up. Well, it looks like now we are in the very short delay of the market reacting to these Bitcoin buys. Because again, let's not forget, Strategy, Stretch, Saylor, just one man is buying more Bitcoin than all of the Bitcoin supply daily. And then, of course, we all know the 100K was a psychological point for a lot of people. It was the I made it moment for a lot of the Bitcoin OGs. And it seems like that selling has finally been exhausted. It seems like there's not that many people left selling Bitcoin currently. And literally one company's buying them all up. So again, let's go over to, here's bitcoincorporations.com/STRC ATM tracker. And this is today's amount of buying. I've been referencing this interest here that literally in the first 30 minutes, first hour of the market's opening, in that 1 hour, Saylor's buying more Bitcoin, or Stretch, sorry, or the investors that are interested in the Stretch product are buying more Bitcoin than the total daily mined volume. So this is for today. I will, if you want me to, I'll cover what he did yesterday. It's actually at the bottom of this. But for today, these are the updated estimated acquired, buys from Stretch in Bitcoin. And now it's up to 8,886 Bitcoin. And you can see down here at the bottom, which is probably the crazy number. Just today, Saylor has bought 19.8 times the daily supply. 19.8 times the total Bitcoin mined a day is what is being attracted to Stretch. Now, going down here, you can see the weekly this week. How much Bitcoin total volume? Yesterday, 1.2 billion or 1.1 something billion. Today, 838 million. In the week so far, already bought 2 billion. We're already 2x what he did all of last week in the first 2 days. The real question here is this interest in the STRC product going to increase? Is there going to be literally $1 billion of Bitcoin bought a day from here on into the distant future from one company? And what does that mean for where we are currently in the Bitcoin price? If you guys are watching, I'm not going to do TA. Actually, me and Kent were kind of joking that we might do TA. But
Nico, I'm just saying, as a miner, I am trying to keep up with Saylor. You know,
yeah. Let's hear from the miner's perspective.
I just can't
Keep going.
You guys, $2 billion, 2 days. He's producing. That means 20x what the miners are producing.
It's insane.
You just cannot do that for very long before the price reacts. And we're seeing it react right now. But like, wait until the momentum buyers come in, right? Like, we are at the phase of the market where we're in seller's exhaustion mode. That means there's not many people selling against Saylor here because all the weak hands are out, right? So that means as he buys, he's starting to push up the price. But guess what happens next? When the market starts to get bullish, momentum traders step in and then they start to push that. Yeah. So then the price starts to move even faster. Now, I'm not going to say that 2 days in a row makes a trend. I think we need at least 3 dots before we can draw a line. But the direction here is highly, highly positive. And, you know, the thing that this Saylor's purchasing behavior reminds me of, Opti, is the old Archimedes quote. You know, if you give me a lever long enough and a fulcrum on which to put it, I'll move the world. It feels like that lever right now is Saylor with this stretch strategy where he's leveraging the fact that people are greedy about wanting more dollars, right? That's why people are investing, because they want their 11.5% dividend. They want dollars. They don't see Bitcoin as money. So yeah, give me the dollars, please. And that's causing him to do this Aikido move where he's using that greed for dollars to service his self-interest in getting more Bitcoin. And then that drives the price of Bitcoin up. And then that makes it easier for him to get his 11.5%. So that's the lever. The fulcrum is Bitcoin itself, right? And the world he's moving is the dollar. And I think unless the U.S. government steps in here at a certain point in time, this literally is going to break the dollar. And I guess I will be happy. I'm not going to come out super anti-dollar here, but I got to say that's not a bad outcome if Bitcoin just winds up hyper Bitcoinizing here because of stretch and the long lever it's representing.
Yeah, no, 100%. And well, I'm a here actually. Let me pull this off before I cover a little more, because I think I'm a little less bearish on the dollar demise right now with what we've seen in the Middle East, and I think I will cover a little bit in the numbers here, but I'm more of the idea that I think we will have Bitcoin in dollars. I'm more of the bimetallism phase kind of guy. That's probably where we're going to be for a while. But what we are seeing here, and you are right, and I know Saylor doesn't like to call it this, but we are seeing a speculative attack right now on the dollar. And I think this stretch product, whether people know what's happening or not, like you said, they're falling into the greed of they just want more dollars. And Saylor is using that greed against them. And so we are seeing a speculative attack. Now, I know Saylor doesn't like to say that, but that's exactly what's going on with strategy, with the common stock, MSTR, with what's happening with STRC and all these other products. It's like, this is without a doubt a de facto speculative attack on the dollar. You basically, you take out you use dollars to get more Bitcoin, and you use the incentives of the fiat system to acquire more Bitcoin. And in the long term, we all know that the dollar is going to lose purchasing power. But while you were talking, it really triggered the idea in my mind of like the great man theory. I don't know if the great man theory is necessarily, it's still a theory. And if you guys don't know the great man theory, the idea is that in certain moments in history, there is just a single person on planet Earth that fundamentally changes the course of history. Now, I don't know if Saylor's that guy. I don't even know if the theory withstands, but I do like the idea of the great man theory. And like you're saying, Saylor is using the tools at his disposal right now to fundamentally shift the course of history, and we're all watching it in real time. And I think this is why I am so mind blown by why we're seeing with stretch. And again, you guys know me. I'm a Bitcoin and self-custody kind of guy. I don't recommend these products unless you have, I know, very specific like needs that you would need these products. But Saylor, again, And I'm speculating here. I don't know. We won't know until we can look in hindsight, but it does seem like Saylor is fundamentally changing the game. What's he's been saying for so many years, like all our models are broken. I think now we are totally in uncharted territory overall in general. Yes, we still have kind of the 4-year cycle meme, but Saylor's been saying 4-year cycle is dead. And now, we are in a bear market, but it's not an 80 to 70% bear market. Do we even consider it a 45% drop a real bear market, or is this just like a standard market correction? Are the Bitcoin cycles, quote, playing out differently now? Are we in, I don't want to say it, guys. I don't want to say it. I don't want to say the dirty S word here, but is it super cycle territory? As you can tell, I'm getting a little more bullish here on the show. I don't want to say this time is different, but man, it is truly mind-blowing what is happening with STRC, or rather maybe the interest into this product. And if this continues, that's like the big idea here. If this continues, it's a big if. If this continues, if this does accelerate, maybe it's not going to be just $1 billion a day, like Kent was saying. 2 days is not enough information to really see a trend here, but we are starting to see, hey, second day, basically another billion of buys into stretch. We have 2 weeks now with at least $1 billion a buy. Next week's going to be very interesting if we come out and he also hits that $1 billion buy. So maybe it's not $1 billion a day being bought, but $1 billion a week just through this product. It's hard to imagine a world where we have someone buying $1 billion of Bitcoin a week or $1 billion of Bitcoin a day. 450 Bitcoin mined a day, literally buying 20 extra supplies, basically weekly or daily. The demand supply economics just don't make sense in this world to say, oh yeah, we're going to have another black swan leg down. It's going to 40K. Hey, I know Nico was right about the 4-year cycle, but maybe I'm right about us not going to 30K. And the chat would be like, okay, hey, look, Opti was wrong. We'll forgive him for not realizing that October was the top. But he was right. We aren't going down to 40K. So maybe we're both right. That's why you need Nico and I on the show, because, he called one thing right. I got it wrong. He called one thing wrong. I got it right. Hey, it's a perfect balance here.
Well, since I always see you now and not Nico anymore, I'm gonna say I'll forgive you. I'll forgive you, Opti. The reality here is, though, as you were talking, I'm sitting here scratching my head and there's always been the buyer of last resort that has represented the bid that sort of catches price. I don't know if you're familiar with that language, but there's always been that hardcore Bitcoiner that shows up, that starts buying in bulk at the bottom, and that's what sets the next price floor. And if you look at it, it seems like the buyer of last resort this time is Saylor. Right. Yeah. He is now the bid. And what's really cool, if you think about it, is it was a bunch of incremental, small plebs basically that were setting the floor before. But now here's this institutional buyer that's setting the floor. That is a radical difference. And that's like a magnitude scaling order for Bitcoin's adoption, right? And maybe it's just Saylor, but guess what, guys? The next cycle, and I don't think cycles are dead. Now, the question is, there's a 4-year, a 6-year cycle, a super cycle, whatever superlative you want to put in front of the word cycle, cycles are not dead. There is going to be bull phases and bear phases. And I think, the next time when we get to this bear phase, let's say it is 4 years, if we are in a 4-year cycle, just for the sake of argument, instead of it being one Saylor, I promise you guys, there will be multiple Saylor-esque figures setting that institutional bid. Hey, it might even be a sovereign nation state, let me just while out for a minute. That's maybe where we go. So it's cool to see that the floor is no longer having to be set by just the plebs. We've got some big boy capital entering the ring here to help us out.
Yeah, I mean, and what you said is one of the things that a lot of us have been speculating. I've been saying it on the show for a while. Is I truly believe that we do not fully understand what an infinite bid means for Bitcoin, and we're starting to kind of grasp this idea, what it means to have someone with high conviction or multiple people with high conviction, as you said, buying billions of dollars or $500 million or hundreds of millions of dollars of Bitcoin a day, that fundamentally changes all of our models because we've never seen that in the past. And the other thing I've been saying, and it kind of got everyone mad in the chat, they're like, does anyone even buy Bitcoin because the price has been going down? It's like, everyone out here is talking about, oh, we're Bitcoiners, we're buying Bitcoin. I think they're just kind of, using us as exit liquidity, because why isn't the price going up if we're seeing all of these Bitcoin buys? Well, again, there's been a lot of sellers. We've been covering the idea of there's been a lot of sellers. Now we're seeing that we might be at the point where we are seeing a very short delay in like market reflexivity. It's like when you see a huge buy, if we are breaking out currently, and I don't think we're going to do TA today, Kent, but we were talking earlier, chat, and we're like, hey, the TA's looking pretty good. The downtrend has broken. We're above the 50-day moving average. We're above the May 2024 kind of high that was the resistance for a little bit. It is feeling a little frothy here. And is Saylor the guy that literally changed the course of this bear market? Is he literally changing the course of Bitcoin's trajectory? And I also believe kind of what you're saying. It's like, we don't know what the cycles are going to be moving forward, but what we do know is there will be some form of cyclical nature in Bitcoin, whether it's a macro grand cycle, hyper Bitcoinization, super cycle, however you want to call it. Like, there will still be boom and bust in Bitcoin for the significant future until the whole world's on Bitcoin, and it's just like that gradual gradual, stable climbing thing as the world gets more productive. But it's truly incredible what we're seeing right now. And I know a lot of hardcore Bitcoiners, that are just like, self-custody Bitcoin, bro. I know that they're not the biggest fans of Saylor. I think everyone's just like, man, I wish I had more money because Saylor's buying up all the Bitcoin right now. But the point that you said, I think a lot of us haven't fully cemented in our mind is, guys, retail is no longer in control. You can be mad about that. We can complain about it. Or you just realize, hey, all I got to do is just try to acquire more Bitcoin. If I'm selling Bitcoin right now, you're selling it literally to the big banks and Saylor. If you're not buying Bitcoin, then you are losing market share to the big boys, the big banks and Michael Saylor. Like, the only thing you can do right now is either complain about this or try to acquire more Bitcoin, and then just kind of strap in and have fun and enjoy the ride, because we Bitcoiners, the average individual, I don't think is anywhere close to being in control to how the price moves anymore.
So let me just make a couple of quick points on this, because I think it's important, Opti. I think we've introduced a new risk into the chat room.
Yeah.
And that risk is 6102, right? I think we need more Saylors, not less. Because right now he's on a boat carrying one person, right? Like, that is not safe from a 6102 attack. And I promise you, if this continues to be another Billy a day for multiple days on end here, and it really starts to, show that the emperor is naked, meaning that the bond market is absolutely naked, the US federal government will get involved. And I don't like how that looks. And that is a risk. I don't know how it plays out, like, literally don't, but we need more institutions to show up here. That way that risk is spread out. And that is what we are giving up. And I don't think there is any way around that. So I'm not crying over spilt milk here at all. Like, there was never going to be a way for us to move Bitcoin to hyper Bitcoinization just with retail capital. The big boys had to come in. They had to get involved. They had to buy. And so I don't think that there was any way to avoid the outcome they were going to. But by gosh, if we don't need like the Zucks and the Cooks of the world and the Fang, the Elons to start showing up and buying too, that way, we can outflank the U.S. federal government before they decide to come after Saylor. And if that happens, I mean, it won't be the end of the world for Bitcoin, but it might be the next market top. We'll just see how it all plays out here. But the second point I want to make is more just about what you're saying about the great man theory. And I think that you guys all heard it here first, folks. Opti just called Saylor the next Alexander the Great.
To be clear, I did not actually say that. Okay, but you got whatever.
George Washington. Whatever.
Quote me. Whatever. Quote me. I don't care. Clip it. I don't care. But while you were talking, it did remind me of, you know, a lot of people trolling and maybe the cynicism amongst Bitcoiners in this bear market that strategy is the real Bitcoin strategic reserve, that they're just going to take all of this Bitcoin. He's been stacking. That's why they let him stack so much, is because they know that, yeah, that's our Bitcoin. It's not really Saylor's Bitcoin, which really does come into the main fight here. As we always say, you know, self-custodying Bitcoin is the revolution. I totally understand why people find a need in their portfolios for these, quote, Wall Street products, however you want to name it. But that is the main threat here. Yes, you might get, you know, a leverage play on Bitcoin if you buy strategy, if you buy STRC, etc. But that is the trade-off that a lot of people do not really factor into why they should hold Bitcoin over a MSTR or whatever. And that's not to say that Saylor's a bad guy or by any means saying that. That's just the idea. Hey, why was Bitcoin created in the first place? It says in the white paper, you know, money works on the internet so far as you use a trusted third party. Whether you like Saylor or not, strategy is a trusted third party here. So that is the philosophical divide here. I think there is a place for both of these in your portfolio. Obviously, Bitcoin in self-custody, and maybe you want to, you know, 1-2x levered play on Bitcoin because you think it's going to take over the world. You want to get a little more gain. I totally understand that. But that is probably the idea that is lost on most people because, as you said in the beginning of the show, Kent, a lot of people are getting caught up in the greed of, I just want more dollars. Well, hey, we got to remember history, and history doesn't, you know, repeat, but it does often rhyme. And we've seen things like this happen in the past. So that's just one of those things that we definitely have to continue to talk about. But hold on, let me rewind a little bit because I still have more numbers for you guys. So let's check this out, guys. Here is, again, this is Bitcoin Corporations. You saw 2 billion, but let's go over to Saylor Tracker here. Now he is close to $60 billion in Bitcoin. I saw Polymarket odds this morning saying that I think the odds to him getting about 800,000 coins by the end of this month are at 85%. So look, his stacking has accelerated, and you can see the buy from yesterday, but it wasn't 14,000 exactly, but it was 13,927 Bitcoin for roughly $1 billion. Last week, wait, do I have this last week buy? I think it was, oh no, there. Okay. Anyways, last week, he basically bought all of that in 1 week. Now, the next conversation here is Saylor just going to get to $1 million for $1 million Bitcoin for Strategy's holdings, but when is Michael Saylor's strategy going to pass BlackRock's IBIT? Because it's getting close here, guys. Oh, dang. Hold on. It's getting very close here by the numbers. I don't know. Maybe we should be taking Polymarket bets on when strategy is going to pass IBIT. And I think if we do see that happen, there is a fundamental conversation to be had here, because I was talking yesterday with Nico on what we're seeing. I don't know if you saw this news, Kemp, but yesterday we saw Morgan Stanley essentially announce that they wanted to become a Bitcoin bank. I know a lot of people are saying that strategy, Saylor's end goal is eventually to be the de facto Bitcoin bank. He's basically doing the, Bank of England play, but with Bitcoin. And while I was kind of thinking through that process, one of the ideas that I had was, even though these institutions were 15 years late to Bitcoin, they still seem to have a lot of influence in the market. They're still able to attract a lot of Bitcoin. And there is a real threat for a lot of us Bitcoiners that have been in this for a long time, that are making Bitcoin products, to just completely get our lunch eaten by these big dogs because people still trust them. But I think if strategy is able to surpass IBIT, that's one of those data points to show that, hey, if you do the product, if you create the Bitcoin product with the true Bitcoin ethos, the market will, you will win in the market. So I think if this happens very soon, I think that's going to be a very significant kind of data point here. Like strategy passes BlackRock's holdings. you know, like Larry Fink might have some competition out there, and he is a Bitcoiner. You kind of just love to see it. So I'm actually rooting for him to pass IBIT. Again, I am a little concerned, like you said, of him holding so much Bitcoin. I'm like, I see these buys. My first thought is, man, this is incredible. My second thought is like, hey, yo, Saylor, leave some Bitcoin for the rest of us, bro. Like, what's going on here? You're gonna make the price start ripping, and you're going to be the only one with Bitcoin. I need to buy some more Bitcoin. You know, I'm not complaining. I'm just like, dang, I really need to buy some more Bitcoin. He's taking them all. Taking all the Bitcoin.
So here's the thing, though, Nico. The way I think about this is, Larry Fink having getting upended by Saylor, I think is a wonderful thing for the marketplace. I don't know if Larry is used to that, and so I'll be curious to see his reaction to be in second place. So that would be a healthy outcome to watch. But I think here's the thing: Wall Street is late to this game, right?
Yeah.
If you go look at all the Bitcoin that's out there, you know, we're up to 20 million total that's been mined at this point. I forget the exact number. I know we crossed the threshold recently. Yeah, over 20 million, because we have less than 1 million left to be mined. The thing is, the majority of all that Bitcoin right now, what we're talking about is a slice of the Bitcoin available pie. The rest is all in private wallets.
Yep.
And so when you look at that, basically the plebs have already won the game as long as they continue to sit on and hold the Bitcoin in self-custody. Like, the game's already won. What's being fought over is the froth up at the top. And that right there is, you know, we need to, as a community, continue to purchase and self-custody and not participate in these products to the greatest degree. But the value of what they have is just the top. And I think it's like 15 or 20% of all Bitcoin in supply. I could be off the mark a bit on that number. So please double check and look that up. But what always strikes me about Bitcoin is this was the first product in Wall Street's history where the plebs front ran the Wall Street market, right? Wall Street's trying to play catch up fundamentally on the rest of us. And that is a fundamentally unique and different power dynamic. And I think that ultimately it causes Bitcoin to be a Trojan horse for Wall Street. And a lot of the Wall Street vets, I think, have been thinking, oh yeah, we're digesting Bitcoin like every other product we have out there. And I don't think that that's the case at all. I think Bitcoin is in the process of digesting Wall Street, and they just don't realize it.
Yeah, no, I think that's a great point, because as we start to walk down this path of Bitcoin being financialized, and it could just be a symptom of the bear market. You know, I've been feeling demoralized. I think everyone's been feeling demoralized. We all expected a lot more in 2025. But I think that's like a good point to remember that, hey, look, Wall Street isn't here taking over Bitcoin. In reality, it's Bitcoin taking over Wall Street. It's just in this process, it is kind of messy. It's almost like it's not happening how we expected it to happen, because a lot of people expected, hey, you know, 8 billion people are going to use Bitcoin, and then eventually Wall Street's going to get in here. And what we're seeing is like retail is completely nowhere to be found. They're asleep at the wheel. Bitcoin is at 75K. The idea of, oh, I'll buy Bitcoin when it's on discount. Well, Bitcoin's on discount. No one wants to buy Bitcoin. And we're seeing institutions come in and buy a bunch of Bitcoin, created a lot of Bitcoin products. And people are like, we're having this, I don't know, cognitive dissonance right now where it's like, wait, is this what winning feels like? Is this how we were supposed to win? Is Wall Street actually taking over Bitcoin? Or was this just the way it was going to always happen? And I'm with you. I think the same thing, because I don't know. I mean, roughly, depending on the numbers, it's like 2.5 million Bitcoin on exchanges, 21 million Bitcoin, or we could go 20 million Bitcoin. So what's that? Like maybe 10 or 12%, maybe 15 at the highest of the amount of Bitcoin that are being traded. I think the last numbers I saw was somewhere around 60% of all the Bitcoin is held by individuals. So the other, 30% is being held by institutions and public companies. Like, people forget that the majority of Bitcoin is held by individuals, but we're getting caught up with all of these numbers. We're getting caught up with the headlines. Hey, Wall Street's here. They want your Bitcoin. They're buying billions of dollars of Bitcoin a day. And you're just like, man, is this what winning feels like? Are we being co-opted? Is Bitcoin really what we thought it was going to be? And we just always forget the most of the Bitcoin it's held by people. And that's what Kent's saying. It's like, we did kind of already win. Now, to be fair, Ken, I don't really like the idea of Bitcoin has already won because I feel like it makes us complacent. And I
hate that.
I want everyone to be prepared to be in this for 5 to 10 years minimum. Like, it's not a sprint, it's a marathon. So I also believe like Bitcoin is won. But I don't like to say it too much because I can feel it. I'm like, all right, well, if Bitcoin won, then I don't got to do anything. I don't have to show up. I can just get complacent. I can go drink Mai Tais on the beach, and I have to make sure that I'm locked in every day, ready to show up and drink a lot of coffee and geek out, or else I don't know. It feels like why are we doing this if we already
Nico?
won?
Or Opti. I just called you Nico. I'm sorry, Opti. let me give you my take on that, because I feel very strongly about this point, and I think most of the Bitcoin community gets it wrong by separating it as an either or statement instead of a both and statement. Bitcoin has already won, and it has to be fought for, and those seem contradictory at first, but fundamentally, what Satoshi did was figure out how to leverage human self-interest. Every single actor on the Bitcoin network works to their maximum self-interest, and the network and the price goes up. That is how Bitcoin works. Now, what that means is if you are a holder of Bitcoin, you need to work to your self-interest and fight for Bitcoin so that it does not get overtaken. But guess what? It's the social layer that causes Bitcoin to win. And I am 100% convinced in our social layer having the conviction and the commitment to serve their self-interest, which causes us to win. So it's a knock-on effect of winning, and it does not come without a fight. And we will fight because it's in our self-interest to do so.
Bars. I love that reframing, Kent. Love that reframing. I see a good comment here by Third Gear Pull, but I'll answer that after the break because I think it will kind of connect to what my next topic is. So, guys, again, I am going to have a little bit of an update on the Middle East. Of course, it's really going to be more Bitcoin focused. In the news, we got another huge announcement from Wall Street, and then in the end, me and Ken are going to be talking about. He's got a very interesting. Cool. What would we call it? A prop? Cool prop that he got at BitBlock Boom. We're going to have a cool conversation towards the end of the show. So that's today's show. I'll be right back after this commercial break, and we will continue chatting about Bitcoin.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Alrighty then, guys. current Bitcoin price is 74,918. If you weren't watching the price this morning, we were in the 75s for a little bit. And I'm not going to TA, guys. I'm not going to TA, but hey, let's just say, Bitcoin is it's a very interesting spot right now. It's breaking some trend lines. That's all you need to know. Don't trust, verify, but hey, if you are a TA, tarot card reading person, the TA is looking kind of frothy right now, guys. It's getting a little bullish. Anyways, the discount from all-time high is 40.6%. The market cap, guys, wow, we are back at $1.5 trillion market cap. That feels pretty good. And the block height, TikTok next block, 945,065. I repeat, 945,065. All right, guys. Now, I think what is the most interesting aspect of Bitcoin breaking out or potentially breaking out is if you put this in the context of the Iran war and what happened in the Middle East. Now, shouts out to Bitcoin Archie, or Archive, sorry, our boy Archie over here. And he goes, Bitcoin is up 17% since the U.S.-Iran war started. It's outperforming stocks, gold, and silver over the same period. Here you can see the chart. Bitcoin is the new safe haven. Now, kind of unpacking this a little bit, what I find to be the most interesting aspect of this is Bitcoin was the first thing to drop when the war was announced, or rather over the weekend. Over that one weekend, I think 6 weeks ago or 5.5 weeks ago, when the U.S. initially started this operation, mission, war, whatever you want to call it, that Friday night when the bombs first dropped, Bitcoin had it went to 60K. It had a pretty epic drop, and we're like, oh man, this is going to be absolutely brutal. I expected Monday that Bitcoin would drop even more because now we're in a war, a prolonged war. Who knows how long this is going to happen? Who knows what the implications are going to be? But we saw the opposite happen. We saw Bitcoin hold up very well. And people were yelling at me in the chat. They're like, how could you say Bitcoin's resilient right now? It's at 65K. I'm like, well, I expected Monday morning when the markets open that Bitcoin would drop even more. We haven't seen that. It's actually been relatively stable in that 65 to 70K range. Now, after what we saw this morning, Bitcoin is seemingly leading the charge. Now, the idea here is essentially, are we seeing Bitcoin finally get back to what we've known it to be in the past, that it will lead all of the general geopolitical kind of world events? Whether it's a bad event, Bitcoin will usually drop first. Whether it's a good event, Bitcoin will usually start to pump first. Is this breakout that we're seeing to 75K another indicator that Bitcoin is leading the charge? We've seen it finally kind of decorrelate from the BlackRock software ETF, which it has had very strong correlation with. We're starting to see that decoupling. We're starting to see, hey, maybe decoupling right now for Bitcoin isn't necessarily that Bitcoin goes up extremely, like we see an Omega candle while everything drops. Maybe Bitcoin decoupling looks like everything dropping and Bitcoin kind of just staying where it is. And now we've gotten another dynamic here where it seems like, I don't know if you guys saw this morning, but it seems like, I know the negotiations over the weekend in the U.S.-Iran war, they seem to have fallen through. It looks like this morning I saw some reports that maybe they're coming back on the table. Maybe the markets are starting to price in that, hey, the Strait of Hormuz closing might necessarily not even be that bad of an event. It might have been a planned event from Trump. And you know me, I'm not a plan truster here, guys. I'm not a QAnon, Trump, 5D chess guy. But one of the most interesting things that I saw over the weekend that I think is really maybe the signal here of what's actually happening is a lot of the oil tankers that were stranded in the Strait of Hormuz were rerouted into the U.S. They started to go into the Gulf of Mexico, the Gulf of America, and they're trying to get U.S. oil now. It does seem like I saw this Instagram, or it wasn't Instagram, it was on Twitter, and the title was something on the lines of maybe Trump's plan was to lose the Iran war, and here's how this looks. And essentially the idea, again, this might be, QAnon, 5D chess, Trump plan, trusters type stuff. But the idea to get the I don't know, the resolution you wanted, which was the closing of the Strait of Hormuz. And what we've seen since that happened, since the initial kind of negotiations have failed, is that it looks like the U.S. is becoming like the de facto U.S. oil exporter, basically routing around Iran, routing around that 20% that goes to the Strait of Hormuz. I keep forgetting if it's Saudi Arabia or Qatar, but they just finished their pipeline so that they can get their oil everywhere else. It seems like the world has rerouted around the Strait of Hormuz as being the kind of, one of the focal points for energy. Obviously, for us in America, this is a good thing. For other countries, say, European and Asian countries, it's not looking so hot. And it does seem, this is falling into the Tom Luongo camp that, hey, maybe this was the de facto result that we wanted, that now the U.S. is going to maintain dollar hegemony. If the world needs to come to the U.S. for oil, what does that mean? It means the petrodollar system can continue to proliferate. So that's why I think I was super hesitant earlier to kind of jump in on the idea that, yeah, the dollar is dying here and it's losing control. From what I'm seeing in the last week, it seems like the U.S. may have strengthened their dollar control. But at the same time, what are we seeing with Bitcoin? Bitcoin might be breaking out. Maybe things aren't as doom and gloom as everyone makes it out to be on Twitter. Maybe things are a lot more positive for everyone, and we're not going to see a World War III. We're not going to see, global economies crash. We're not going to see oil crises. I was very adamant on the idea that we might be seeing, energy lockdowns. It seems like, hey, maybe it's not as bad as we think it is. Or also, maybe I'm just being optimistic because Bitcoin's frothy. It's at 75K, and I'm like, hey, dude.
Your name's Opti?
Yeah, my name's Opti. I'm like, hey, man. Bitcoin starts pumping and I start feeling a little better. I'm still a little hesitant right now. There's still, I guess, a chance that we don't maintain this strength. But if we get to 80K by the end of the week, guys, I'm going to be like losing my mind. I'm going to be like, I told you guys, bull market is confirmed. Bear market wasn't that bad. So let's just hope we get to 80K. And then watch, I say that and then it drops. But anyways, I don't want to rehash all that, ranting and I guess mumbling that I did. But what do you think about the idea of Bitcoin finally doing what we all know it to do, of it leading the markets, of it being the first thing to drop because it is so saleable, because it is 24/7, 365 days a year? It's the first thing that reacts to good and bad news. And maybe this breakout is Bitcoin leading the charge once again, like we've seen it do in the past. And I know a lot of Bitcoiners they have this knee-jerk reaction to the idea that Bitcoin does react to macro factors because it's, parallel, it's a parallel network, guys. And why are we trading based on political macro factors? Like, why do we care what the Fed thinks? And it's like, well, hey, guys, there's a lot of suit coiners in the market. Bitcoin is a macro asset now. That's just something we have to deal with. Like, Bitcoin is a macro asset now, so it will react to macro events. But it might be leading the charge currently. So I don't know. I'm ranting. I went too long. But what's your thoughts on this, Ken? Are we back to Bitcoin leading the charge and leading the markets?
Well, I mean, let me give a different framing for how I think about this, which is that ultimately, like right now, we are seeing the Bitcoin holders dominate the market, right? We're out of sellers. And that's why we're seeing the buys by Saylor start to cause the price to not just bottom, but now start to move up and to the right? That cohort that is at the bottoms, the macro bottoms, those people are the ones that have decided that Bitcoin is money and dollars and fiat are not money, right? So they're not wishy-washy. They're just in here holding Bitcoin because we know it's inevitable. It's going up and to the right as compared to fiat. So what happens is these macro bottoms, like I currently think we're in, even if there's another leg down, I'll still claim that this is one of those macro bottoming effects. I don't think we've got more than a leg down if we get it. And I agree with you, like right now with kind of the TA I'm seeing in my astrology for hombres, look at the charts, is that it is breaking out, right? And so that's a healthy thing, assuming it holds the breakout and doesn't fall back below. But all of that said, this is what happens when the long-term convicted people are in the market setting the bid at the bottom, is that they begin to separate from all the other markets.
Yeah.
And that is the hallmark that I've seen over and over again of multiple cycles here. So I've been in since late 2015, and every time the screams for we're going to die, we're going to go down farther happen at the bottom, and then you start to see the sellers get exhausted, the price sort of stabilize, and then it goes up, and then people are like, nah, it's just getting ready for another leg down, and then it continues to pivot. But this is what it looks like when Bitcoin bottoms: is the sellers exhaust, the price deviates from the rest of the markets, and then we start to go up and to the right. And that's not a hard omega candle situation at all, but it means that we start to grind it out and start to head back for new all-time highs. Too early to say that that is where we are. We need to not just break out here, but hold the breakout, likely on a retest. But it is beyond like shoots of green moment here from where I sit. It's like, no, like odds are looking good that this is turning here. Not, everything's probabilities and not certainties, but probabilities are higher than 50-50 here that the bottom's in from where I sit.
Yeah, I'm with you. I think I have like this running bet with Nico. I'm like, he can't be right. You can't be right twice. Okay. So we're not going lower, but have we breaking out? I don't know. But hold on. I do have to acknowledge a comment here. Our boy Familia Diaz in the chat says, this level of plan trusting is disgusting, bro. Dude, I am not a plan truster. All I'm saying, and I said in the chat, that the boats are going from the Strait of Hormuz to the US. Look, that's what we saw happen. Okay. I'm not a plan truster. I'm just saying the boats are coming here. It's just interesting.
Opti, let me make one comment about that as well. So I am not a QAnon 5D chesser here. And I will say that Trump has got a way of navigating chaos that I think is particularly unique. And so I kind of think that he is a particularly unique leader when it comes to Pandora's box, which is kind of how I classify where we are right now. Is we're in a Pandora's box moment where there's a lot of chaos, a lot of fog of war. I don't really understand what's going on. I mean, the Doomberg guy went into the Straits of Hormuz and came back with a very different story than any of us were hearing a week or two ago.
Really? What do you say? I didn't see that.
Oh, just how things are being paid off and how ships were still being brought through. He paid $15,000 to ride in on a dinghy and see what was actually going on the ground. Very interesting, but it was a completely different narrative than we were all hearing. So I don't think that there has been a time in human history where the fog of war has been worse than this conflict. And so I would be very cautious, and I would caution anyone to have any strong conclusion as to what's going on. With a combination of propaganda coming from every military that's involved, combined with AI capabilities to both create visual and text content, man, touch grass, guys. Let's see what happens. We're not in control.
Yeah, no,
the
yeah, the fog of war misdirection that we are seeing, I think you said an interesting thing. We've never seen it like this bad, if you want to use that framing, but like what we're seeing is that fog of war, that misdirection, that propaganda is literally being used as part of the war. It's being used deliberately as a tool. And the closer you try to follow along on this, like the harder and more confusing it gets. But if you understand that what we're seeing is being used directly as a tool to misdirect us, to misdirect enemies, to misdirect allies, you start to understand what is, maybe a little closer of how the mechanisms are working. But you did say something interesting. And I know a lot of people don't like to admit it, but without a doubt, whether you like Trump or not, he has fundamentally changed politics for forever, just by the character that he is. It's fundamentally different now because of who he is and what he's, the character that he's been the last 10 years. Like, things are different, and we've all kind of adjusted to this new type of politician that if we go back to the old stuff, we're going to be mad anyways. It's like, I think we're only going to accelerate, and it's only going to get even more extreme because of the precedent, if I could even, the precedent of the new precedent. But yeah, I think things are fundamentally different now. It's you've been around for BitConnect. You were around for BitConnect back in the day. I'm reminded of Carlos Matos. We no longer live in the world that we once lived, or whatever the meme was. Man, good day.
Yeah, it's all, our perceptions. We're no longer in Kansas anymore, Toto. And I think actually 50 years from now, I have this pet thesis that historians will look back on this time period and will label this as World War III, and they will say that it was the spooks versus the people. Because it is that bad, the propaganda machine and the mind control and the neural linguistic programming. I genuinely, I think that the outcome of everything that's going on is that it's going to be very hard to find sources of truth like you and Miko, Opti. And you're going to have people in your social graph that you've met in person that you're going to need to talk to. And otherwise, most of us are going to drop off and go play analog games and probably enjoy life more when we do. Yeah. And maybe that's just my hopeful thinking, but I really do believe at this point, and I'm happy to be proven wrong, that it's just my paranoia tinfoil cap. But I really do believe right now that the populace is being shaped by narratives from the spook class for various reasons, and that is the war, is the information war. And I'm not a big Alex Jones guy by saying that either, by the way, but I just think that there's a crazy amount of effort to control our minds going on right now. And the only way to get out of that is to check out a bit.
Yeah, no, I'm fully on board with the idea that World War III, like we're currently living through it, and it might not be a huge kinetic war like World War I or World War II, but I think you nailed the nail on the head. It's like, this is an information war. We are currently living through, I think, the biggest information war ever. We saw the beginning in 2020. I think it's only going to ramp up as we get closer to the end of this decade. Like, we are currently in the process of the biggest global information war period. And I know a lot of us don't like to think in those terms because maybe it's a little bit of doomer, but I view it the other way. I'm like, no, like, we are all soldiers in this, guys. Whether it's, what do we always say? You know, memes are the art, or tweets are the bullets, and memes are the artillery. Like, we are all frontline soldiers. If you are chronically online like us, we are all in the memetic war. The memetic war has not ended. The information war has not ended. It is all happening simultaneously, and we won't know it actually happened until it's over. So, hey, it might be a long time, guys. I think that's my theme for today. We might be in this for a long time, guys. So, you know, touch some grass, do what you need to do to chill out, unplug. But every Monday or every Saturday, whenever you're off your work and you check in on the front lines, you got to dust off those memetic powers, because we're going to keep doing this. Anyways, Kent Jones. Kent Jones. That's good.
Good one. There's no way out but through, brothers and sisters. There's no way out but through.
That's so funny. All right, guys, let's keep it moving. I will give you another huge update coming from Wall Street. Guys, institutions they want your Bitcoin. I guess institutions, Wall Street want your Bitcoin, and we got another huge announcement that just dropped this morning. So we'll be right back.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you already know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
righty then, guys. So check this out. The connection, the timing is probably the most interesting aspect of this. But Eric Balkunis, of course, senior ETF analyst at Bloomberg, tweeted this morning, shock, Goldman Sachs jumping into the Bitcoin ETF game with a filing for a Bitcoin premium income ETF. Now, it is very interesting that they don't really even have a name for it. It's just Goldman Sachs Bitcoin premium income ETF. They're just like, holy shit, we need an ETF like pronto. We're going to file for this. Now, there was a little longer blurb here. Oh, wow, computer's acting up. Here is the rest of the tweet. We got Eric Balkunis. He goes, interesting side note. This is a 40 Act filing, so it has to use a Cayman subsidiary to get around regulatory limitations already holding commodities. BlackRock, meanwhile, is a 33 Act product that is similar. Goldman may sense an opportunity to leapfrog them and or is probably hearing from their clients they want Bitcoin, but with less volatility and are happy to give up some upside for lower downside and income. AKA Boomer Candy. Anyways, can't say I saw this coming. I kind of just thought JP Morgan and Goldman Sachs would sit crypto out in favor of competing in other categories. Now, obviously, this news in and of itself in the past might have been a big news story, but I think the bigger story here is connecting this with, remember what we saw last week. Morgan Stanley launches their ETF. It's their best performing ETF out of all of their ETFs. January 2024, BlackRock launches a Bitcoin ETF. It's the best performing ETF out of all of their ETFs. Now we have Goldman Sachs being like, okay, actually, it looks like we have to join this Bitcoin game now begrudgingly. Like the heads might not want to do this. It seems like maybe their clients want to do this. Maybe the managers want to get some fees here. So the connection between last week's story of Morgan Stanley launching a Bitcoin ETF. Now we see this week Goldman Sachs wants a Bitcoin ETF. We obviously don't know when this is going to launch, but we also know Charles Schwab's about to launch Bitcoin trading. I think every huge bank in the U.S. has some form of Bitcoin product. I think maybe Wells Fargo is the only one that's left. JP Morgan's been in Bitcoin with the authorized participant of the BlackRock ETF. They're going to launch loans, Bitcoin collateralized loans. We're seeing, Morgan Stanley, now Goldman Sachs, Citibank. Every bank now is at the point, and I said this was going to happen. We've been talking about this for a while, that at the highest levels of traditional finance, they're starting to wake up to the idea that they cannot ignore Bitcoin any longer. 17 years in, they're like, yeah, okay. Hey, we have to do this or else our clients are going to go somewhere else. And further, they're not going to have that reputational risk anymore. It's like the hottest flavor right now of the week, or rather the year, is we need Bitcoin products. But let's go down memory lane a little bit here. If you haven't been in Bitcoin for a while, and maybe you aren't so caught up in all of the news around Bitcoin, but Goldman Sachs has spent years explaining why Bitcoin wasn't a real asset, why you shouldn't be buying Bitcoin, why you should stay away. And shouts out to Freddie New here. He's got a nice little blurb here. He goes, Goldman Sachs, one of my old clients on Bitcoin in 2020. It's not even an asset class. And here's the highlight. One slide offered the withering perspective that cryptocurrencies like Bitcoin are not even an asset class in the first place, and that they offer neither cash flow nor a hedge against inflation. And here we are in the big 2.6, and they're like, actually, we're going to launch a premium income Bitcoin ETF for your portfolio. It seems like everyone eventually, as we say, bends the knee to Bitcoin, and we just have our newest casualty. Actually, guys, maybe the sacrifices that we need for the bull market to continue isn't necessarily within the space. It's just everyone capitulating to Bitcoin. We're truly in the 2026 is the institutional era. As we said earlier, retail's no longer in control. And further, maybe Bitcoin companies are no longer in control. It's like Wall Street is here. Now, the other little wrinkle of this is they wouldn't be doing this at this time if they didn't think that they could also attract a lot of capital into this ETF, which does relate to what we heard the Morgan Stanley digital asset head advisor, whatever her name was, say, hey, look, we launched an ETF. We had a very strong opening day. And we only think this is going to increase. So if you think that BlackRock or maybe Strategy has taken the entire total asset market share for traditional finance capital to flow into Bitcoin, I think you're sorely mistaken. I think this is only just starting. And the numbers we're seeing is like, it's literally like that meme of the tsunami on the horizon. And we're just seeing little waves hit us. And the Bitcoin price is going up and down because of these little waves. If we see the massive tsunami capital coming from Wall Street, from traditional assets into Bitcoin via these ETFs, via these Bitcoin loans, via these Bitcoin products, trading, etc., though it's not perfect, I think we really underestimate how much capital will be attracted into Bitcoin by the end of this year. And all of the predictions of, oh, we're only going to go to 250 is completely out the window. Every major bank, basically every major hedge fund, we have nation states buying Bitcoin. The game has changed. Look, I said I didn't want to say it. But I don't know. Am I seeing the same thing, Ken? I think things are different now.
We're not in Kansas anymore, Toto. I keep saying that. It's true. I think the way that I'm looking at this right now is just look at global M2, guys. It's 110 trillion. I gave a presentation at BitBlock Boom this last weekend and refreshed those numbers just last week. 110 trillion, right? If you look at the number of Bitcoin on exchange, the last numbers I've seen is, and it's a range, and people don't totally agree on how much liquid Bitcoin is available, but on exchange, around 2.2 million. If you price that out, that means that 0.02% of global liquidity is needed to make all the Bitcoin disappear. That's it. Now, I know the price will go up as people decide to buy more and more of it. However, we are governed by Gresham's law. It is the reason why when you go to spend your Bitcoin, you always have a moment of double checking yourself. Do I really want to spend it? Because that means I have less of it, right? We're hoarding the good money and we're spending the bad money. And so inevitably, in my opinion, we will see all 2.2 million on exchange disappear. This last cycle, and granted, who cares if we're still in the 4-year cycle or not when I make this statement, but when price was increasing last year, the last 2 years, 24 and 25, we saw Bitcoin coming off exchange. That is the store of value process like playing itself out, right? And that has not concluded. In fact, I don't believe we will conclude the store of value adoption until there's no Bitcoin on exchanges. And guess what? Then we move from the buy phase to the earn phase of Bitcoin's adoption. And how that plays out, in my opinion, is, I'm going to be very contrarian when I say this, but I think when there's no Bitcoin on exchange, we start to see a lot of merchants price their goods and services in Bitcoin to try to get Bitcoin from people that are holding Bitcoin. And so that comes next, and then medium of exchange. But what we're seeing play out right now, just to pull it all the way back to the beginning here, $110 trillion of global M2. That's liquid capital out there in the market. And right now, the value of Bitcoin on exchange is 0.2% of that. 0.2%. That is it. It does not take a very massive amount of that capital to flow in before there's no Bitcoin on exchanges. Full stop. So I do think we could see things radically change in a different way. And I do think that we are close to the moment where this time is different. And if it's not different now, then it's a very short time before it is different, where it's institutional capital. And we're never going to get through hyper-Bitcoinization without going through this doorway. So this is kind of inevitable, and the Wall Street is going to think they're digesting it, as I said earlier, but they're not. Bitcoin's digesting Wall Street. So hang on, not fun. Cold storage your Bitcoin, and the ride will take us up into the right.
Yeah, and then to like kind of add more fuel on the fire of that idea is something that we haven't talked about on the show for a while, but like the multiplier effect, that every dollar that comes into Bitcoin doesn't necessarily mean just like $1 added to the market cap. I forget what the number is in like a bull run, but it's somewhere between like, for every dollar that comes in, it's like $8 that is added to the market cap of Bitcoin. I think that's like the average number here. So what was that $121 trillion flowing into Bitcoin? I'm not saying it's going to be, $800 trillion market cap, but if a small number of that, like Kent was saying, flows into Bitcoin, the market cap of Bitcoin, the market share of Bitcoin isn't just going to move 1 to 1. It's going to be a big exponential move that's going to blow people's minds. And so I think it's still going to be a trickle. I would love to see the faucet turned on, but I think it's going to probably be a trickle into Bitcoin. But hey, we still got a long year ahead of us, guys, and we know how quickly things can change in the Bitcoin space. So I don't know, Ken, I think we're getting kind of bullish on today's show. I think low-key, even though there's some doomer here, we're getting a little bullish. Maybe we're getting a little more bullish as the days progress, Anyways, let's get into the culture. We're going to be chatting with Kent about his really cool prop there from BitBlock Boom. We got a pretty good kind of road sign in Bitcoin currently in regards to Bitcoin mining. And then, of course, this is a big month for Bitcoin. So, Kent, we'll be right back, and we're going to just chat it out to round up today's show.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, Sat123.com. Sovereignty isn't just about your money, it's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
All right, Kent. Well, glad you're on the show. You wanted to start with, you just came back from BitBlock Boom, and you have a really cool prop over there. So let's start the conversation with that.
Yeah, so I got to give a shout out to to Mel. She's one of the lead organizers for BitBlock Boom, where I was at this last week, and I didn't realize it, but she, the day before the conference started, she went out to the Federal Reserve's Mint in Fort Worth, where the conference was. And you can take a tour. It's open to the public. I mean, they do security measures, of course, but you can take the tour, go see how they print money, and see that they can print money as much as they want, as long as they keep feeding into the plates the right amount of ink and paper, that they can make a bunch of bills. Basically as much as they want, right? Just controlled by the Federal Reserve's desire to print zeros in their database. And so this is a sheet of 50 $1 bills. They are actual currency. I could cut them up at the conference. They were being signed. That's what you see, all the defacing. It's not really defacing, as I learned. There's a clever workaround on that. You're not defacing currency unless you try to change the unit count on it. Then you're defacing, and that's the federal crime. But it was being signed. Yeah, it was being signed by everybody that was there at the conference, and I was very lucky to be given this at the end of the conference, and so I've got it now as a prop in my office. But it's a very cool effect, and there was a couple people that were brand new Bitcoiners at the conference, and I was using this as a prop to demonstrate the difference between Bitcoin and fiat. Because this, I just rolled it back up, this can be printed in as much abundance as the 12 Federal Reserve governors, I believe that's what they're called, maybe have it wrong, would like, by printing zeros in the database. So there's no connection to reality. It's all just a delusionary narrative that people come up with. And, loosely, we're going to try to control inflation, but we're going to make up the statistics for how we measure inflation, and we're going to adjust those all the time, and we're going to try to count the jobs. And, it's all a bunch of smoke and mirrors to print money and debase the currency and take away from from people, their purchasing power, and keep the economy from being deflationary, which it naturally is. So you take that sheet and you use that as a visceral response to try to educate somebody on how Bitcoin works. And then you say, look, Bitcoin itself is constrained by the laws of physics because you actually have to use energy connected to the right hardware and an internet connection to print money. So you've got these two different forms of money printers. One is centralized, controlled by politics primarily. And then the other side is controlled by laws of physics. Which do you want, right? It was really eye-opening for people to hear and see that on their journey, is to understand that Bitcoin is tied to energy and our money is not. So that was a very cool experience to get to share with people.
No, that's super cool. And I think the crazy part when you showed me that is like, yeah, I could literally cut these up and I have $50 in $1 bills, and it's like, man, it's such a trip that, yeah, they just print these sheets out. And as long as you gave them your money to buy it off of them and then you cut it up, then it's not counterfeiting and you're not making fake dollars. It's actually real money here. Man,
it was so
weird. It's such a weird thing.
It is such a weird thing. So I was given this at the end of the conference, but Mel, who purchased this, paid $50.50. So to be fair, it's $51 bills and they charge an extra 50-cent premium to sell it on a sheet, and you do your own cutting. So it's backwards logic, right?
Wait, Kev, before you go on, I got a joke. So it costs more money to buy wholesale dollars than it does to get normal dollars. I'm pretty sure wholesale is usually cheaper. Dude, it sounds like a great racket.
Yeah, I think it is a great racket. They probably have a tour price on that too. They probably sell those as well. But, I think in conjunction with this month of April, so I don't know if most people know this yet or not. It's kind of obscure Bitcoiner trivia here, but April 5th, 1975 is the date that Bitcoin, or that Satoshi had for his birthday in his profile. Now, there was no comments on this, but if you go down the education path or research path, you can see that date is connected to two different things. So April 5th is the date at which, in 1933, Executive Order 6102 occurred. So a lot of people think that there's symbolism by Satoshi having the birthday of April 5th. And then 1975 is the year at which you could personally possess gold again, right? So 6102 was the beginning of confiscating everybody's gold, and 1975 was the year that people could get their gold back. And so pretty cool. We liked it so much as a company, this particular date, that we decided to run a campaign for the month of April. So anybody that purchases a mining rig from us, just to honor Satoshi's birthday here and, move away from this sort of printed money to mine your own and participate in a decentralized printer, you can type in happy birthday in the discount line and get $150 off a mining rig from us. So just kind of our way to honor Satoshi's birthday here for the month of April. I'd be happy to talk a bit more about what's going on in mining and generally, but I think, the main reason why we wanted to honor Satoshi's birthday this month is just, hey, he intended Bitcoin to be distributed by mining, not by buying it. So we wanted to make that a bit easier.
Yeah, no, definitely. Let's definitely pivot into mining in general. Though I don't know if you saw, but we were talking about it earlier. We just saw this morning that we have officially gone 50% of the way to the next halving. So we got the block. We are 50% to the next halving, guys. I mean, it's going to be another roughly 2 years here, but, we're at 50% of the way to the next halving, guys, which usually means probably got a little bit of upside here. So anyways, Kent, let's do a general view of Bitcoin mining right now. Actually, you haven't been on in a minute. And one of the things that we have, maybe actually you might have been on the last time we did cover one of these stories, but what we have seen is a lot of, I'll put this nicely, a lot of pressure coming from the public Bitcoin mining treasuries currently. And I know last time you were on, you're like, I think this might be a bullish time for individuals to get into mining. So could we get an update on what you're seeing just generally in Bitcoin mining? I know it's usually not the most sexy conversation, but it's one of the most important aspects of Bitcoin is obviously Bitcoin mining. We wouldn't be here without the miners, and we try to highlight that constantly, but people usually tune out when we start talking about mining. But we're gonna nerd out a little bit. So where are we generally?
Let me nerd out and go back in time, and let's go have a walk down memory lane for a minute. So from 2009, when the network and the first block was mined, until 2013, everybody that ran the Bitcoin software could mine through a simple toggle. And that is, in fact, how most Bitcoiners that I've met during that time period acquired their Bitcoin. They mined it because if you were running the software, you could use your computer to mine Bitcoin and help secure the network. Well, in 2013, two things actually occurred that caused the timeline to split. And now most of us are buyers, not miners. And those two things were, one, the ASIC came out. So this was because the difficulty got high enough that manufacturers invested in making Bitcoin specific hardware to mine with. And so it became harder to mine. And in 2013, Coinbase opened their doors. And so it became easier to buy. And those two events separated how we the timelines for how we acquire Bitcoin, right? And that was a unique event in our history. And this was what my conversation at BitBlock Boom was about, was all the unintended consequences and all the mining centralization that has come downstream of that. And the kind of, to get to the core of that conversation, what you see is there's a lot of what I call fiat hashers that have been on the network. And fiat hashers are those folks like the publicly traded mining companies that have a fiduciary responsibility, a financial and legal obligation to give their investors returns. So the people that are shareholders, their shareholders and their unit of account is dollars. So by definition, publicly traded mining companies have to return more dollars to their investors. So by definition, they are fiat hashers, meaning they are there to get Bitcoin as a stepping stone to get more dollars. And guess what? As you can imagine, that doesn't necessarily align you with the interests of the Bitcoin network. And what has happened is there's been a centralization of mining pools. There's only two pools, Foundry and Ant Pool, which is a subsidiary of Bitmain, that contain 49% of the current hash rate, right? So that's only two throats that have to be choked before a Bitcoin transaction can be censored or double spent, right? And so that's a threat to the network. And more than 50% of the hardware is produced by Bitmain. So despite the Ant Pool relationship there, they also have more than 50% of the hardware. So there's all these mining centralization that has happened because basically, as a community, we've decided it's easier to buy than mine. And the mining community has failed to deliver easy to mine products for the community. So this right now, to your point, Opti, we are seeing all the pubcos dumping a lot of Bitcoin on the market, and that's probably the biggest seller right now. But once that's exhausted, the price will go up and to the right. And they're doing that because they're funding a pivot to AI, most of them. In fact, I think it was Bitfarms that has renamed themselves. I can't remember what they renamed themselves to, but they're no longer a Bitcoin company, the CEO said. So we are seeing all these publicly traded miners pivot off. And that gives a unique opportunity in time right now for the Bitcoin community, and hopefully companies like ours that have a complete vision to make this easier to mine for the average person, gives us an opportunity to actually take back the network, because taking back the network and having the majority of the hash rate come from people looking to acquire Bitcoin instead of fiat is going to lead to a longer term, healthier network and a better protected network, and won't allow the centralization to happen. Because if the majority of our community had been mining instead of buying, I promise you the mining pools would not have centralized in this way. We would not have allowed the supply chains to be as centralized as they currently are. So yeah, that's obviously a passion point of mine, is to get this message across. But at the end of the day, this is a very healthy thing for the network from where I sit. It's just like in the same way that the people that were here for the fiat gains sell their Bitcoin at the market bottoms. We're seeing something very similar happen with the miners.
Yeah, that really brought the question to my mind. Do you think we are starting to see a trend of, I don't know if I want to necessarily say that like public mining companies, like there won't be any public mining companies in the future, but do you think we're starting to see a trend where like the individual, I don't know, pleb miner is going to take a larger role in Bitcoin mining, or is it still going to be like a symbiotic relationship here? Because obviously from a public mining perspective, the margins are very, it's a very tough business to say the least. And so do you think that public Bitcoin mining companies are just going to go away? Or are you just saying, hey, look, the pivot's just good for an individual? If you've been thinking about it on the fence, like we're at the bottom of the bear market, now it's probably the time to get into mining some Bitcoin.
So I think it's nuanced and complicated.
Yeah.
I don't think
the question was nuanced. It's hard to get the question now.
Yeah. So let me try to frame the question and then answer it for myself, right? So I'll be the questioner and answerer. I'm playing answerer, and I'm playing chess by myself then. But the way I think about this is, what is the role of the publicly traded miner in the future? And what I see is, it's going to change because the investor is going to change and get more educated, understand what Bitcoin is. So I think until the relationship between the investor and the publicly traded company shifts to realizing that Bitcoin is money and that is what Bitcoin mining is for, until that changes, I think the publicly traded miner will largely follow fiat-based gains. But I do think it will change, and I think publicly traded miners will change the mandate with their investors, and the investors that are there for the exposure to Bitcoin acquisition will back those companies, and then they'll be a more predominant part of the ecosystem again. But until that happens, I think there is a movement with the average Joe that you can see that it started off, I would argue, with the BitAxe. That was an explosive product that came to market where everybody wanted to mine at home. And I think that's educated a whole class of Bitcoiners. And now they're seeking more opportunities, whether it's to mine from home or to participate with a product like what we've developed, which is mining as a service. Think what Uber brought to the taxi market is what SaaS mining has brought to the traditional hosting market. But you look at that desire, and I think it increases. And I think that the average person right now being able to have a hash rate heater, so you're getting a discount on what you'd otherwise use to burn electricity to heat, is a big part of that movement. And I think, again, the ease of use of products like ours brings more people. I think there's a counterintuitive part of mining, though, that I think our community is starting to understand, not fully yet, but when it comes to mining, the best time to put capital into mining is when the numbers look the worst. So what I see right now is the smartest money is showing up and buying in bulk, a lot of it. And what I also see is that in the ripping bull market is when most people show up. But then when the bear market turns, their returns that they had counted on stop looking so good. So it's kind of like you want to ride the wave up and take advantage rather than coming in when the numbers look the best. And that's a weird counterintuitive thing. But if you just stay focused on, I'm just acquiring Bitcoin, and is my monthly electric bill less than what I would have spent on in exchange to get that same amount of Bitcoin, then you're looking pretty smart.
Yeah. And I mean, isn't that just how it is with Bitcoin in general? When everyone says Bitcoin's going to die or in a bear market, that's probably the best time to be getting some Bitcoin. And yet no one does it. And I think the extra step of, at least before SaaS mining was so popular, as we've talked in the past, a lot of I forget what they're called, the cloud mining stuff, it was like the biggest scam ever. And everyone was like, oh, this is such a good deal, because for a lot of people, we can't really build like a mining farm at our house, So it's like, yeah, that sounds great, but there's that extra step of friction on top of it where it just might not make sense. You're in an apartment, you have a wife, you don't have that much space, you don't have the the luxury of building a soundproof area in your house or something like that. But now things have changed, and with companies like SaaS, it's like, look, you can still mine Bitcoin. You don't have to you don't necessarily need to have the product in your hand or ASIC in your hand to still get the benefit of just getting some Bitcoin. What do we wild sats? Getting some wild sats here. And actually, we got a comment here though. It's really a question for you, but it's not worded the best, so I don't know what the framing is. It says, is SaaS mining solely US? You guys, I know for a fact you guys are not just mining it in the U.S., which I don't know if that's a question, or is he asking, can non-U.S. citizens sign up for SaaS mining? So I'll give you the floor, and I'm going to pull up the website so we can chat a little bit about it.
Let me answer all the potential derivative questions here.
I
How
don't know
about
what the
that?
question is. I don't know what the question's asking actually, but it says mining solely U.S.
Let
That's
me
what we'll go
start
with.
personal, and then we'll expand from there. I am a U.S. citizen. How about that? I happen to live in Peru, but I am a U.S. citizen, and the company is headquartered in Wyoming, and is a U.S. based company. We do have data centers, not just in the U.S. though. We have data centers in the U.S. In South Dakota specifically. We've got a data center in Norway. We've got a data center in Paraguay, and one in Ethiopia. And we're looking to bring on more data center capacity. In fact, in the next few weeks, I believe we'll have a new opportunity listed. So really excited about that. But at the end of the day, if you look at, we've got great reviews. That's a mine a Bitcoin today. That's our energy cost to mine a Bitcoin today. So basically, how much electricity do you spend divided into how many sats you get, and you can see exactly how that plays out over time. So you get more sats for your dollar. But if you go in, you can buy a mining rig through our e-commerce, and we get that set up for you. Right now in Paraguay, that's about 3 weeks turnaround time. Actually, if you purchase right now, we've got a batch of mining rigs that'll be deployed by next Wednesday. So that's a pretty quick turnaround time there. And then we should have Texas up and operational, I would imagine at the latest by the first of next month. And that'll be pretty quick turns on hardware there too when we're going. And then we have still more capacity in Ethiopia that's available. And we're backstopping a shipping delay there with virtual mining rigs. So that is cloud mining, to answer that question. The difference between what I like to think of as sovereign data center mining versus cloud mining is the fact that clients have the outcome of their particular hardware. The serial numbers would tie the entire experience to their hardware. And what makes our business model fundamentally work is the fact that we go out and do all the hard work to find a data center, to figure out that entire relationship and make it easy for our clients. But we do it all based on finding low cost energy, right? Like the value proposition just doesn't work with your home electricity price, at least for 99% of people. And so that's what gave our business model an opportunity. And so how we designed our business model is unique. First of all, we're the first in the industry to come in and build a software platform first to make this an easy and accessible experience. And then we apply data centers to it. And then secondly, the other thing that makes us truly unique, so that's the software as a service being applied to mining. That's how we coined the term mining as a service. But the second thing that makes us unique is the fact that, as far as I know, we're the only ones that make money only if our clients do. And what I mean by that is our clients have to pay for the electricity, they have to pay for the hardware, but we don't make any money there. There's no margin that we build into those, or no profit built in, I guess, to be more specific. So we have all of our expenses offset by those two costs, except we take a management fee. So unless we're producing you Bitcoin, we're not getting paid. But if we do, then we take 15% from the mining pool. So we never custody anybody's Bitcoin. The Bitcoin is paid out directly from the mining pool to you and to us at the same time. And it's just 15% for doing all that work. And, I was actually talking to one of my staff this morning, and we were sort of estimating if a customer wanted to go out and develop the type of opportunity that we have with a data center, what's the minimum amount of money they would have to throw at it? And really, you're in the millions.
Yeah.
Just straight up, you do. Because if you want $1 million, if you want 1 megawatt, which is the smallest amount of rack space that anybody is willing to give, that's about 350 mining rigs. You're $1 to $2 million worth of hardware on that, let alone all the work to set up the relationship, get educated, how you're going to monitor and manage the fleet that's there. So, what we're doing is really making accessible something that is largely inaccessible, and that's the value proposition that we deliver. And we only take money based on a success-aligned approach, which is, hey, if I can't make you Bitcoin, then I'm not getting paid either. So it's a big risk and a lot of alignment of incentives that we've taken on to deliver this. And we think there's a lot of money to be made in this business model in the long term. And we love being able to democratize access and get more people into Bitcoin mining so that the social layer better protects the network. And every single member of the team is a Bitcoiner. That's like the first that's the first screening layer that I do when I bring anybody into the team.
Yeah. All right. Great. I think the only angle that's left is, does he have to be a U.S. citizen to use
I didn't answer that,
SaaS?
did I? No. In fact, we don't. Yeah, geez, I did not do a good job answering all those questions.
You hit like 5 different angles, but that was the last one. I don't mean to put you on the spot here, but
no, you did it. You did it. I'm just bummed I missed it. No, we have clients from all over the planet. In fact, I would estimate, because we don't have to personally identify our clients. We do need a name and a phone number and email to talk to you, but you'd be surprised how many of our clients are named Nunya Business. There is an uncanny number of those. Must have been a very popular name at one point. But we would estimate that about 40% of our clients are offshore. And interestingly enough, it does look like, and just correlated, we don't push this or anything, that if there are places where there's been a lot of regulation on being able to get to an exchange and buy Bitcoin, we do see that's where we see a lot of offshore activity, is people still want their Bitcoin and figure, well, shoot, why don't I just get it by mining it?
Yeah, interesting. That is very interesting. I don't think you've brought that up in the past. That's actually super interesting. It's kind of one of those ideas, and we are going to wrap up, Kemp. But the more that your country or your local jurisdiction tries to fight Bitcoin, the more Bitcoiners fight to get Bitcoin in whatever way possible. Obviously, legally, legal means, but to get some wild sats, that's one of the things I think a lot of people don't really kind of factor into this. I see people in the chat constantly. It's like, oh, your government's going to ban Bitcoin. Like, the government's going to ban Bitcoin. And you're just like, yeah, but they can't actually stop Bitcoin. So, like, the government ban literally means nothing. If we've learned anything from China and Bitcoin, is it doesn't matter if they ban Bitcoin. Individuals want Bitcoin, and they can't actually stop Bitcoin. And that's why it's going to win. So maybe full circle here, Kent.
I think so. And this is actually what you're pointing on, is what I think of as, cypherpunk is the decentralized ledger, right? That's what's allowing Iran to accept tolls right now for oil tankers in Bitcoin, and the US government can't stop them. That's the uncensorable layer, and that's the cypherpunks help deliver that. I kind of think of us in the mining community as the hash, right? Because in the
hash what?
Hash punks.
Okay, hash punks.
I'm using that term because you are unstoppable if you have the right hardware, electricity, and internet connection. You do that, you have a decentralized money printer, right? So in the same way that cypherpunks write code, Bitcoiners that want to make their own Bitcoin, they're hash punks and able to print their own money. I think that is one of the main reasons. Those two things I think of are the flip sides of the same coin. So one, the decentralized ledger would be heads, and the ability to mine is the tails of that. But you put those things together, and they truly are unstoppable technology, because you can mine off grid. In fact, in BitBlock Boom, there's some wonderful presentations about people that are mining off grid and what it takes to do that. But there's no way that can be stopped. There's no way that it can be found and discovered all over the planet. So Bitcoin will always remain secure.
Yeah, one of my good friends, he's off-grid miner, and he's like the most hardcore. And I know you know who he is, but I don't want to put his business out here. And he's like the most hardcore Bitcoiner I know. And he'll call me from, these oil rigs in the middle of nowhere. And he's like, yo, what's up, dude? What are you doing? I'm like, oh, I'm like chilling on my couch. I'm just like, oh, just hanging out. I'm like, what are you doing? It's like, oh, I'm out here literally in the middle of nowhere, getting that hash, dude, getting them sats. And I'm like, dude, I could never do that. Like, you're so hardcore. Like, you're hardcore, bro. He's like, well, someone's got to do it, bro. We can't all be lazy on the couch like you. And I'm like, well, someone's got to be on the couch too. Okay. We're all playing our roles here, but anyways, it's always a pleasure having you on, man. It's as our what do we always call it? Our in-house mining expert. It's always a pleasure having you on, man. I will look. you're gonna have to yell at Nico. I will emphasize this to Nico as well. But the next time you're on this show, we're gonna need Nico on here, because I swear every time he takes a break, Kent's on here. But I guess, we're just gonna replace Nico, or you, with Nico. So, the chat doesn't like Nico's 40K bearish call. At least we're getting optimistic. We're getting bullish. So maybe the chat doesn't even want Nico when you're around. I don't know. We'll see.
I'm not going there. I'm not no marital disputes getting started on my behalf here, sir.
No. I give Nico a lot of flack, but that's the fun part about this. Anyways, Kent, really appreciate you coming on the show today. Actually, before I sign off today, guys, I do have to give a huge shout out to Bitcoin 2026 in Las Vegas. Make sure you get over there. It's actually 13 days away. Yeah, 13 days away. Bitcoiners are taking over Las Vegas. It will be April 27th through the 29th at the Venetian. Make sure you guys get there. Make sure you go to, as Nico likes to call it, the Super Bowl for Bitcoin. And look, prices will increase in 3 days, guys. So do not wait to the last minute. Get yourself a ticket now. Come hang out in Vegas. And actually, someone in our Telegram chat asked me, is there going to be an official Simply Bitcoin meetup? Unfortunately, we had thought about it. We're not going to have an official Simply Bitcoin meetup. We were planning something, but plans change. So there's no official Simply Bitcoin meetup, but maybe there'll be an unofficial one, guys. So on that note, again, scan the QR code, and if you use the promo code Simply, you can get 10% off your tickets. All right, Kent, man, really appreciate you being on the show. Until next time, I'll see you later. And to everyone in the chat, you already know, hey, whether you love or hate Simply Bitcoin, we appreciate you watching the show. And make sure, go on.
I just got to get in there and say, hey, I will be at the conference, and just so you know where to find me, at Haliburton on Twitter. If you're going to be there and want to talk in person, love to meet you. It's been fun being on here, and I'm glad could riff and make it so that people are enjoying our banter here. Been fun, Opti, and hope both you and Opti are on next time, or you and Nico are both on next time, and hope to catch up with you in Vegas, man. It'll be fun.
Yeah, you as well, man. You as well. All right, guys, that's today's show. Make sure you stack some sats, get some exercise in, eat some good food, get some sun, touch some grass, call your loved ones, all the things. All right. We'll see you tomorrow for Simply Bitcoin Live. This has been Opti. This has been Simply Bitcoin Live. Peace out, guys.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.